Hello, welcome. Ishimoku Cloud Indicator Simple Guide. The Ishimoku indicator is a powerful indicator that shows the momentum and trend strength and the possible support and resistance level of an asset. Ichimoku uses 5 moving averages and part of calculation produces a cloud that represents potential future support and resistance areas. Two of the moving averages compute the cloud. The Ishimoku settings are 9 period moving average, 26 period average, and average of those two averages and a 52 period average. The cloud is potential support and resistance zones, and when below the price we have an uptrend. When the cloud is above the price we are in downtrend. Before learning how to trade the Ichimoku indicator, you should understand what these lines actually mean. The lines of Ichimoku indicator, the mentioned the lines of indicator are moving averages that have specific functions on the chart. Okay, see this cloud, lagging span line, conversion line, base line. For our purpose, we are not going to cover the lagging span line, Chico span, which plots the closing prices of the previous 26 period. This would be beneficial for traders who want to compare previous price trends with current trends. Conversion and baseline. These two lines represent the time when conversion line Tenkan span shows the middle price of the previous 9 periods high and low. Baseline Kijun sen represent the middle price of previous 26 periods high and low. Both the conversion and baseline are analyzed just like any other moving average. For those that believe moving averages act as support and resistance, they are considered as such. The crossing of the averages and the price relation to the averages represent a trend and momentum in the market. Both base and conversion lines are considered as support and resistance. The crossing of the averages indicate momentum, and space between line can cause momentum strength. Price trading above both lines is an uptrend. Price below the line is a downtrend. You can see that the Ishimoku is not as intimidating as it looks. How does the Ishimoku cloud work? This is the most recognizable part of the trading indicator and comprises a fast line, a slow line, and shaded middle. The fast line is the middle price that is calculated using conversion line. The slow line is the middle price of periods high and low. These calculations are shifted 26 periods into the future. Think of how displaced moving averages are in the future. The cloud will show us the longer term trend direction as well as potential support and resistance zones. Downtrend, uptrend, bullish momentum, transition zone, bearish momentum. You can see a red cloud indicates a confirmed bearish trend, while a green cloud indicates a confirmed bullish trend. You would only take trades in the direction of cloud if you are primarily trend following trader. Prices above the cloud would only have you exposed in long trading position. Prices trading below the cloud would have you in bearish trading positions. The crossings of the conversion and base line is indicate momentum direction at times against the cloud trend direction. How to set up the Ishimoku cloud? I use TradingView, however, many charting platforms will have the indicator as part of package. You apply the indicator to the par chart in the same manner you would any other technical analysis tool. Once applied to the chart, you can enter the settings through the whether you trade forex, cryptocurrencies, futures, or stocks. Oftentimes, the default settings are acceptable. How to trade using Isomo Cloud? Now that you understand the building blocks of the indicator, you should have a fairly good idea on how to trade with it. Pick your bias. Since the cloud is the first thing people notice, start with that. Remember, a price above the cloud is bullish, the price below the cloud is bearish, and the color confirms the bias. Watch for resistance, only short trades, cautious long trades, cautious short trades. This is a day trading chart of the cryptocurrency Bitcoin using the standard settings. At any time, you can glance at the chart and know exactly what strategy to implement and the direction to trade. This is an objective way to determine where you will risk your money. For cautious trades, you may consider using half of your usual risk percentage until confirmation of the trend has been shown. Use the conversion and baseline for momentum in direction. Momentum and trend are different things, and conservative traders may only trade when the momentum is in the direction of the overall trend. Let's break down a forex swing trading chart on the daily time frame and show potential trading signals depending on your plan. 1, 2, 3, 4, 5, 6. The lines have crossed and the price is on the bottom side of the lines. This indicates bearish momentum and cloud be a trade entry. 2. Momentum turns bullish and price enters the cloud, which signifies a possible transition period. Trades may be exited here as you could be seeing a trend reversal. 3. Momentum turns back to the downside. Price is below the conversion and baseline and has broken to the downside from the cloud, short entry. 4. Bullish momentum and reading price action would show higher lows being put in bullish. Bullish momentum is up. Price breaks the top of the cloud for lower risk profile trade for this bullish signal. Possible potential support zone. Aggressive traders may take long trades while the cloud is still red in color. A more conservative trading approach is to wait until the cloud is green for longs and wait for pullbacks in price. Where to set stops and target. Before entering a trade, you must define the risk you are willing to take. While I prefer using the ATR for my stops, let's consider our initial stop loss using the Ishimoku chart indicator. The first short trade on the left would have the stop loss location around the top border of the cloud. This is possible due to the contraction of cloud in that area. If it were too wide, our position size may be too small or we would not have the capital required for trade. The second location is using the high of the baseline as it may act as a potential resistance if price retraces. The last location is below the baseline as well. Profit targets. If you are a trend follower, you won't have profit target because you are trading until you see a transition of the trend direction. Understanding Understanding you may hold a trade until price retraces back inside the cloud, as that shows a possible trend change in forming. If your trading plan includes always being in the market, you would exit a short trade and enter a long trade when price breaks the top of the cloud. Short-term traders may decide to use price structure such as previous lows and highs, or multiple of their risk. Ichimoku indicator is worth considering if you believe an objective approach to trading will help you stick to your trading rules. The Ishimoku is not a bad option. कोणी आणलं? Good. अरे बाप रे, ओके, खाओ. Okay, enjoy. You have several profit options, including always in trading approach. As with all trading systems and strategies, ensure you do proper testing, use a written trading plan, and understand the risk involved.